Hello, traders. It's 8:01 a.m. Chicago time on the 21st of April, 2020. It is Tuesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Crude taking an absolute beating again in June. We all saw what happened with the May contract. It ended up going negative big time for what, a $50 swing down or something, or more. I think it was more like 60. Pretty crazy times. Um, Never seen anything like that. But June now is down 28.54%, 28.54% down $5.83, trading at 1460 in the June oil. I'm suspecting that June producers and inventory holders are seeing the same problem. I mean, if May inventory can't move, then June inventory can't move, and so you have this massive oversupply of the market, lack of storage, and so negative prices. Now, I got to be honest with you here. I know quite a bit about futures, future spreads, and all that stuff. But I have never seen a physical contract go negative. I've never seen that. I expected it to go to zero and be worthless, but it was more than that. It was worthless, plus I'll pay you to take it off my hands. I have never seen anything like this. Just quite amazing. So that's where we stand. The overall market sentiment is allocating to safety this morning. The leader today is the U.S. Treasury bond, which I don't know how many of you have traded bond futures, but this thing has two-handle days quite often. That's a lot of ticks for the bonds. It's up two handles and 7 cents. The Bund is up 83 ticks. The dollar's up 47 and a half cents. Uh, and then the 10-year note up 17 and a half ticks. The Russell is the weakest of the indices, down 3.37%, getting relatively close to its 5% lock limit down on extended trading hours, down 40 and a half points. DAX 340 points off. The Euro stock's down 89, and the Dow is down 582 currently on decent volume. The Dow's down 2.5%. Gold is below 1,700 at 1,672, currently trading down 39 $39.30 or 2.3%. It's where we stand today. It's where we stand today, and that's how things are looking. Uh, we've seen some really crazy things over this with this pandemic, with the rally. You know, the last 2 to 2.5 weeks had one of the biggest rallies we've seen in indices um, in a long time, since I think World War II or something. And it's coming off today, so that's really odd for a world whose economy is held hostage by an enemy that exists in a virus that attacks all of humanity, white, black, Asian, Latin American. It doesn't matter what you are. It doesn't matter what your background is. It doesn't matter whether you're rich or poor. It's attacking everyone that's exposed to it. Yet, you know, the market's running up on record levels, and we were at the peak of this thing last week. We weren't that far from the all-time high, given the situation that we have with approximately 20 million Americans out of a job. I think 20 or 22 million Americans out of a job. The U.S. has already gone well past 40,000 people dead in the last month to a month and a half. Incredible. So that's where we stand currently. Don't know how to make heads or tails of it. The most important thing, though, if you've been trading a while, and most professional traders know that our greatest nemesis is our opinion. Our opinion really gets us in trouble. We have an opinion that this shouldn't happen or this can't happen, and we start to invest money based on that opinion, and it's very, very costly. Let's just pay attention to what the market is doing. What are the different time frame players doing in the commodity that you're trading or in the stock or whatever it is that you're trading, and pay attention to that. That is the most recent and most relevant information to us as participants in the market, because the market is a forward-looking mechanism, and it's a forward-looking mechanism that people take positions into based on things that have not happened. So if we're contemplating an opinion, then things have happened, then things have already happened, and it's already priced in. It's already known information. The price is already reflecting it. The price has actually reflected it already, and has already moved on to the highest probabilistic outcome of what is likely to happen. That's how prices work. Um, that's why it's called a forward-looking mechanism. In other words, the reason a stock upticks or a commodity upticks is because I anticipate that it'll uptick even more, because I generate that uptick by getting in, and I'm expecting at least another uptick to get out. So we are constantly looking at what is likely to happen going forward. So pay attention to that. Yes, the news is important. Many people tell you to turn off the news. I think that's just the wrong advice. I can't trade every news event, but I can certainly have an educated guess, and that's all it is. Randomness is really rampant in the markets, uh, but it helps me have a pretty intelligent guess about how the market may respond based on that news. I don't think I've ever traded without a news feed. So that's important, but don't create an opinion based on that news. We're not experts enough in the effects of a pandemic, in epidemiology, virology, in pharmaceuticals and things like that, to know that we have a solution, or this is likely to happen or that's likely to happen. Just follow the price, and follow the nature of the market. Just remember, I don't have to know. Just think of this as an analogy. I don't have to know you, know your background, know your upbringing and your education level, and how you manage anger or whatever, to know that if you're making a ball with your hand, in other words, a fist, and you're staring at me and you're taking a fighting stance, and you're bringing your fist back behind your shoulder, and twisting your hips towards me. I don't need to know all these things. I don't have to have an opinion to take a guess that you're about to punch me. And so I need to avoid, I need to evade, I need to hit first or something like that. So the market's kind of like that. It has a nature to it. It's just a question of how do I identify within my time frame what the next punch is. So this is the result of a long conversation I was having with someone yesterday about the scenarios and trading, and how it's just all guessing. It is somewhat guessing, but this is an important fact. I'm giving you information that hopefully will help you stay out of trouble by not forming and trading and holding on to those opinions, rather than looking at what the market is saying and how it's not responding. If bad news comes in and the market's not selling off and it's not responding, then you can think that it's too expensive, but it's not responding. So the smart trader, the professional trader, the profitable trader will not be short in that news. We'll just buy it back up. We'll look to the long side. That's basically what I'm getting at, and that skill takes a lot of time to refine. Just don't let your opinion crowd your trading. Opinions are very, very expensive. Okay. Anyway, I went into that a little bit too much. I know that, but where we stand today is risk off. The S&P is below Thursday and Wednesday's range, and is moving very swiftly following yesterday's key scenario to the downside, which worked out beautifully, but was hard to catch because it climbed a lot higher than expected. In terms of what's on the calendar, this morning, we did have some releases. We did have some releases this morning out of Great Britain. The claimant count was forecast at 272,000, came in at 12.2 thousand. It's a huge miss there. The zoo was expected at negative 42.8, came in at plus 28.2, huge miss to the positive side. What's left today is in the US, we have existing home sales at 10 o'clock, expecting negative 9.7% month on month. And in sales, we're looking for 5.21 million existing home units. And then after the market at 4:30, we're looking for API crude oil stock change. You better believe that oil traders are going to be paying attention to that. So let's take a look at what was expected yesterday and just run right through this. I wanted to share that trader wisdom with you this morning because it really irks me when someone is just fighting and resisting the market. So the primary scenario yesterday, the primary expectation yesterday was I was looking for a responsive market to push into the prior range. Responsive means we move back towards the most recent auction or the most recent value. So that would be up. Could be responsive down. If we gapped up, then responsive would be selling. Yesterday we gapped down, so responsive would be buying. And the expectation is we would run into resistance around 45-ish. But the main idea yesterday was that we are likely to push into that 45 area. Remember, I cautioned around the 40 to 45 area. Push into the 45 area, roll over, come into 28, 22, 28, 20, and I was looking for it to spill down into 2806. So that's the bounce here. 2806 right there. That's the stock zone. 2806. Otherwise, if it cannot hold 2806, then I was looking for it to close the internal gap 2787, 2787 with a key balancing point at 76, 75, 76. That would be the big target, big extended target if there was a runner yesterday. Okay, so scenario one, push up towards 45, push down to 20, consolidate, push down into 2806, and then bounce back up. Okay, that's what I was looking for yesterday. As you see it drawn in front of you, here's what we got yesterday. Responsive buying, but I expected it to respond right here. This is the response area. It ended up pushing to the next area up, which was 2860-ish, or so, ended up pushing higher. So that made it very difficult to catch this turnover. And then once it turned over, what did it do? It moved down to 28 what? 2820. That's right, 2822 for a bounce. And then once it broke through, where did it go? Yep, down to 2804. And remember, the big target's 2806 for the bounce into the close. Otherwise, we're looking at 20. Whatever it was beneath there. So 2,800 and then breakthrough, and then the extended target was 2775. 2775 is key below. It's a high volume node for the micro composite or balance in this area. It's a composite high volume node, blah, 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 blah. So yesterday we broke the IB high right here, and then we broke the IB low, and we closed near the extreme or in the lower quartile of the range. That classifies yesterday as a neutral extreme down day. Neutral extreme down day. This is very important because it basically says the market did a good job exploring prices higher and then found its sellers. It successfully found its sellers, and then it explored the other side of the initial balance and wasn't able to do what we would expect, which is to finish somewhere in the middle, meaning undecided. Instead, it rolled over and it closed on the extreme. So what are we looking for the extended trading hours session is we expect That selling, because the auction was interrupted with a pit close, we expect that selling to continue, and we expect that selling to carry us down into the main target, which again is 27.75, this area down here. So you can see the overnight high got to 28.33, but couldn't really push farther. And the overnight low is way below. We actually pushed quite a bit, 27.47, quite a bit of selling, and that's where we stand. So neutral extreme down with a continuation, quite bearish market stance currently. Here's what it did. It reopened during the Asian session. It was holding up okay until it decided to flip down, pull back. Where did it pull back to? So we have an impulse down mid at VWAP and in the mid, and it holds that pretty well. It hold VWAP and mid are about 2804, and it went to 2807, and then we have a continuation trade. And what's going on here? We've got a weak low with a point of control near the low end of the range. This is likely to continue spilling even lower, and that's how things are set up. The delta overnight is quite negative. Inventory is mostly short. A lot of trading occurred below yesterday's close, and you can see that the profile is a price discovery profile. It's not, it doesn't have consensus, so that looks like a profile of a man with a big chin. It doesn't have consensus, and it's continuing to explore to the downside, leaving us with a high probability of the market continuing down. Okay, looking at the order flow real quick. Let's pull that up. Looking at the order flow, pretty straightforward. It keeps slamming up against bids below and taking these little bounces. You can see that right here, but it's broken through a lot of the liquidity, and we're pushing into this higher liquidity as we start to get into the open. We do have some key areas below to test at 27.35. Do you remember me mentioning 27.34.35 yesterday as the big area maybe over the next couple of days? I talked about it yesterday, and that's where we're likely headed. And you can see the liquidity there. This is important. You know, when you have a key reference area with liquidity, this becomes not only a big target, but this becomes a potential for a bounce that's, you know, generally worth, volatility may pick up, but generally worth 3 to 6 to 7 points, something like that, as we push into it. And you can see that this liquidity at the biggest reference price, again, 27.35, you can see the liquidity has been stable and steady, and it's getting wider. As the market gets closer, it starts to flare up as people stack up in front, above and below it. And that's where we stand currently, okay? So that's how the liquidity looks. If we go even deeper, I have full depth. We have the next liquidity level, 2,700 and 2,690, and beyond there, 2,680. These are option strike prices. So that's where that stands. Now, let's take a look at what we're expecting for today's session. Let's take a look at the map here of what we've got and where we are as I share my homework with you. So it takes me a second to set up the screen. So here we are at near the low at the overnight point of control. I'm expecting this is an open auction out of range, most likely. We are gapping down, gap rules apply. I'm looking for responsive buying back into that 27.75. Do you see where it comes from? That 27.75. It's this balance from Wednesday, Thursday, which created a pretty high volume node and a composite high volume node before we get into the one below at 27.35. I expect it to consolidate here. I'm looking for sellers to step back into any response higher, and I'm looking for it to start migrating. Here's the overnight stat being taken. I'm looking for it to migrate into 35, and then from there attempt to go lower, but mostly it's likely to just consolidate back and forth. Wow, I've really squeezed myself to the corner of the screen here. That's the main scenario. Again, response up. I'm looking to sell any response. I'm looking to be offered any response higher, especially around the 75 area. I'm looking for clues as to the market unable to push through. To push through, and then I'm looking for it to sell off. The secondary scenario is we have sellers right away. We do have a weak low, and then we start to grind our way down into this 27.35, and then we end up just bouncing around before we drop into the close, consolidate, and come back up. I expect us to close in this 35 area. I expect this area to be a magnet. I know this is getting messy with these lines, but the second scenario is it just does not look back and it continues in the opposite direction. We're dealing with a gap zone already above, and we're about to create a new one today. There's a lot of gaps in this region. That's what we have. It's 8:22 my time. I'll let you get back to work. Good luck, and I'll catch you. I'll catch you tomorrow morning. By the way, this Thursday at 3:30 Central, 4:30 Eastern, the crew from Edge Clear and I will be on Futures IO. An invitation will be sent out on Twitter, and anybody who's on our lists. And you'll see an invitation here in the description of the video tomorrow. Good luck.